Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to make a quick video going over why I haven't been investing locally to my own hometown, why I'm considering investing locally now. We're going to be going through a property here. We're going to be using Rentometer in order to get the average price here local to a specific address. We're going to be punching it over into the BiggerPockets rental property cheat sheet here they have available for free. There's no affiliations here. This is just fun and helpful information. So if you guys are brand new to the channel, hit that subscribe button below. If you do enjoy the video, find it helpful, hit the thumbs up. And if you have any comments, questions, going over anything in today's video, drop it in the comment section below. I appreciate all your guys' feedback, those comments, and those thumbs up. And let's go ahead and get into it. So I started looking at real estate investment back in 2017. I didn't really get it together until 2018, start actually making purchases. But at that time, real estate was on fire. You could not buy properties for less than 250,000. You know, we looked. There were deals out there, but they were very hard to come by. Properties recently have started to come down, and also rent control was enacted here in Oregon. So a lot of investors are kind of pulling in their real estate investments on the market due to the restrictions as far as only being able to increase rent by 7% plus inflation. So we'll say a 10% per year. But even others are looking at it that in if you're increasing by the rule of 72 by 10% in 7.2 years, your rent would initially double if you just increase it by 10% for 10 years. So a lot of the common sense investors are looking at it like, okay, it's not too big of a deal. I will just increase it 7% per year. If I need to increase it an additional between 7 and 10%, I'll do so, just depending on what taxes are and such. So get that knocked out of the way. Now, here locally, prices go very wild. Our low homes here can range anywhere from the $150,000 range in the city to as high as multi-million-dollar homes. Now, I went ahead and changed this to 10,000 as the minimum, and I'm going to go ahead and select houses, condos, townhomes, and multifamily. Now, we're going to skip the bank owned buildable plans, auction homes. We're going to skip a couple of the condos here, and we're going to look at our first single family unit. So this one just showed up now. This one wasn't popping up before, but we can see this one is listed as $99,000. It's a one bedroom, one bath. We're going to look for something with 3 bedrooms here. That accommodates a lot more personnel. So here we are. We have our first 3 bedroom, 1 bath. This one is listed for $135,000. It's about 1,000 square feet. It doesn't have any pictures available, so that agent is terrible. But they just listed the home. They just wanted to get it out there and on the MLS. So still, it would be really nice to have some information about this home, what it looks like, the conditions of it. Does it need cosmetic? Is it a fixer-upper and such? So here, investor special. So this is a 3 bedroom investor special, meaning that there's probably already a tenant in place. They're saying it does need some work. Are you ready for a project? This sort of description is terrible. I think this agent needs some help. But okay, beyond that, we could do a street view here. We already kind of saw that. We can kind of just do like a 360 here and kind of just take a look at the area. Or what do the other homes here look like in the area? So not a bad place. I believe the schools here are fairly close. Yeah, we have McLaughlin right down, and we have the downtown sort of area here all within the area. If we take a look at crime here, there's a couple crime spots here, but it's not really anything's been reported here within the first couple 3-4 blocks away from the location. We have demographics. We can actually look at what's the homeowner and the location. So here, blue, this is a lot of real estate investment properties. You can see here that in this area of Medford, there's a lot of rentals. So this makes pretty good sense that this property would probably be an investment property. That's why it's priced at that point. You can see here that in Medford, a lot of homeowners are outside of the central. Anything central is a lot of rentals because it makes sense at that buy point. But it hasn't made sense in quite a while, since back in 2013 and prior. You can see here that this home sold for $129 back in '05. It's now listed for $135. So this home has not appreciated, but again, it does need some work. They just don't have any pictures. Now, high-end homes here in the city can go for the multi-millions. So we go ahead and switch this to high to low. We can see a home here, 9 bedrooms for 6.5, 6 for 2.7, 8 for 2.1, 3 bedroom, 4 bath for that 2.1. And you can see that these are very nice homes here. Got a nice view. You're out and about. You have your own vineyard. So you get a lot for your buck here when you're buying those multi-million-dollar homes. And see, we have a whole villa looking style here. This looks really nice here. So have your own little driveway, pool, lights up, lit up everywhere. So this one's probably been on the market for quite a while here. You can see here that it just has not sold for quite a while just because it's hard to move anything this size. So back in 2011, this sold for 1.5. They felt like they got some appreciation, but in reality, they've just been trying to sell it off for quite a while and have been unable to. So always do your due diligence, making sure that you would be able to sell it off in the event that you want to move. So going back to this property here, does it make sense to invest locally once again? Now that properties have started to kind of simmer off, investors are kind of jumping out of Oregon due to rent control. And this is one of the least expensive single family units, so this is listed for 135. Okay, so what we're going to do is take the address here. We're going to jump over to rentometer.com. We're going to go ahead and put in our address. We're going to estimate Medford has a pretty good rent. So 2 bedroom, 1 bath goes anywhere from $800 to $1,100. 3 bedroom, 1 bath, 2 bath, that goes anywhere from $1,100 to $1,500. So this one's a 3 bedroom, 1 bath in downtown area. Not too bad location. So we're gonna go ahead and estimate it's gonna be about $1,300. We go ahead and hit the analyze button, and we can see that the average price. Now this gives you an average price there. Anything in the green would indicate a little bit below. Anything in the yellow is pretty much within your price that you kind of set it at, and anything in the red is in the high point. So these homes over here are renting out for $1,700. That's a nicer area in that southern Medford sort of style. There's some really nice $300,000 homes back in that area, but here in Central, we want to focus more on these little central areas. So we have a couple properties here right about that 1250 range. So this home here could probably rent for about 1,200. We'll say, if it was fixed up, $1,200, pretty good right there. So we'll say $1,200 is our rent. Now, it wouldn't meet the 1% rule. So maybe if this one sits on the market due to rent control, that's driven a lot of investors from looking at Oregon, and we make them an offer. It's been on the market 1 month, 2 months, no one's biting anything. We make them an offer at 115 or 120. They accept it. Let's say 120 is what they accept, and that would actually meet our 1% rule because 120,000, 1% of that is $1,200. So now we're gonna go ahead and jump over to our calculator over here on BiggerPockets. If you guys aren't familiar with this website, great website for real estate investment. You can get connected with other investors and network. You can learn educational, listen to podcasts, take part in webinars, have access to free tools up to 5 times, and take a look at the marketplace. Here we're just going to go ahead and go to tools and take a look at rental property and start a new report. Okay, I'm going to go ahead and close out of this one. We no longer need it. We're going to go ahead and take the address here, pump it into our report title. I'm just going to go ahead and drop that in there. Annual property taxes, we can get this pretty quickly. Going down here to the bottom, it should have it listed. Property taxes 113. I believe that's about right. So we're going to go ahead and just go 113 by 12, and that's going to get us a really close estimate. So we're going to copy that 1356, jump back over here. Annual property taxes 1356. Not too worried right now about a description or photos. So we're going to offer them 120,000. They're going to accept that at that point. We may need some repair value. So maybe this home is listed low because it needs some repairs. We can't see the inside of this home, but they can say here, they've said in the description here that this does need some work. Are you ready for a project? So we may have to go into it $15,000 for repairs. Estimated repair cost. Let's go ahead and estimate. This should cover flooring, paint, cosmetic works, maybe a couple random little things. I don't believe this should need a kitchen, but we'll see how this kind of. We'll just go with this number for right now. After repair value, it's already in pristine sort of condition. I know Zillow does a little bit estimate of this property. You're actually able to zoom in a bit and see what other properties have done in the area. Just by hitting that in there, you'll see here that that was located in here, so you can kind of zoom in, take a look here at recently sold instead of what is for rent. And we can see here that these homes here within the area, a lot of these 3-bedroom, 1-bath, recently sold for about 115. We have a 94, 118, 160, 125. So we'll say that 130 fixed up is pretty much that's pretty much what it's worth. 130,000. That's correct. Purchasing closing cost, 1% rule. So closing costs here probably about, actually I think it's about what, 3%, 2%. So 2% of purchasing price. That's missing a zero. That's $2,400 for the purchasing cost. We'll just go ahead and punch in $2,400. Cash purchase, no, we're doing some sort of a down payment. This is going to be a real estate property, real estate investment property, so you're not going to be living in it. You're going to have to put at least 25% down in most cases. Now, I recently went through my loan here, and I got a rate of 6.25. That could be a little bit higher than what you're going to find online. I went locally because I know I could close my loan within a month or less. It's very easy to do that. So I got a rate of 6.25. There was no charges to me. I didn't have to pay anything. Now, loan fees and points, I don't want to wrap anything within the loan. If you're doing a real estate investment property, you don't want to wrap up your fees into the loan itself. You want to pay these off out of pocket because it's deductible. You can expense it out. You can deduct it. It's part of your in your taxes. So you definitely want to get this removed out. That way you have as much cash available to you. You don't have to put any more cash down, and all you have in your mortgage is the property itself. So here we're going to go ahead and interest no, amortize over 30 years. We're not going to go ahead and put anything here. It goes. We're going to go ahead and select next. Total gross rent $1,200. Other monthly income none. Electricity, we're going to leave that up to the tenant. Water, sewer, we'll leave that up to the tenant. Property, PMI, we can select the little icons here. So we're not going to have any sort of private mortgage insurance because we're putting over 20%. We're not going to be paying for garbage, HOAs, monthly insurance. Monthly insurance is about $75 per month. Somewhere within that range is pretty accurate. We can actually 75 is pretty good. I think that's what I got on mine. So $75 a month for monthly insurance. Other monthly expenses, we're not too worried about that at that point. Vacancy, we'll plan for a 5% vacancy, even though here in Medford we have about a 1% vacancy rate. Maintenance and repairs, we can put away 5% per month. We can actually bump it up there to say 7%. We'll go 8%. I like $100 there, so 8% there. Right about $100 a month. Kind of setting it to the side for repairs and maintenance. $100 aside for capital expenditures. So repairs and maintenance, just down the line, some point, something is going to break. There's going to be some sort of a leak. There's going to be a door that needs to be replaced. Capital expenditures are more like the HVAC, the roof, exterior. Something that is not really easy, just normal wear and tear and repair. And then our management fees. Property managers normally charge about 8 to 12%, just depending on how many properties you have. If it's your very first property, it's about 10%, depending on what that property manager does. PV growth. PV stands for how much you expect the value of the property to increase. We're not going to go ahead and base our expectation of this home based off of a valuation of, we're not trying to speculate and that this home is going to appreciate in the future. We're just trying to see if it makes sense to buy it and if the rent will actually rent and cash flow, and sales expense is about 9%. That wraps up that 6% realtor fees, plus it wraps into closing costs, and if you have to pay to have what's it called, pest and rot. A lot of the times the seller has to pay for little pest and rot. They pay the closing costs, they pay the real estate agent. So 9% is normally what I punch in there for sales expense, and that's going to wrap up our information. Calculate, there it goes. Okay, so logged in, and we're able to see the address here. We can see the purchasing price, our purchasing closing costs, about 2% of our closing costs there. Estimated repairs 15,000. So we buy this for 125. We put in 15,000. Our total project cost is 137,400. Our after repair value, you can see here that we're a little bit over our repair value or ARV by 7,400. Down payment, we put down $30,000 on this home. We had a loan of $90,000 at a rate of 5.625 over 30 years. That's a monthly property insurance of $518.09. Okay, so here is the breakdown. We can see here that our monthly income, we're collecting $1,200. We have $1,078.09 of expenses. These expenses include vacancy, $60, capital expenditures, $96 set it off to the side, management costs of 10%, that's $120. Property taxes, we're getting, we're setting aside $113 a month for property taxes at the end of the year. We have repairs, we're just setting cash aside for repairs. Our insurance, every month insurance is collecting a check from us. That's $75 for the insurance. And we have property P&I there, property insurance. Oh, our normal insurance and then P&I. Okay, gotcha. And that's $518. So that is pretty it there. So $518, that is our property, mortgage, and insurance costs there, $518.09. And so we can see here that our total operating expenses plus our mortgage adds up to $1,078.09. Now, if we actually just take a look at our cash flow here, so we do get extra cash. Repairs, this is a mind thing. You have to be setting this aside for yourself. You're going to be collecting a $1,200 check, but you're not going to actually see all these expenses at once. You're not going to have it. You're not going to have repairs every month. You're not going to have capital expenditures every month or vacancies every month. This is just planning for the future. You're setting money aside every month that sometime during the year, maybe not in the first year, maybe not in the second year, but down the line, you're going to have some sort of vacancy that you're going to have cash, you're going to need cash available to kind of handle that. And so this property here would cash flow about $121.91. This would put it at a 3.09 cash on cash return. Your return on investment, that is fairly low, below the stock market. The average return of the stock market is 7 to 10%. So this in itself would not really be worth the risk. That monthly cash flow, I don't like to look at cash flow anything below $200. And cash on cash return, I like at least 12% in real estate investment deals. So here, this in itself is not great. What I do like about Bigger Pockets though is if you go down here towards the bottom, you actually see your 3% here. So the first year, your income is going to be about $1,400. The second year, if you're going to be increasing rent by X amount here, we only increase rent slightly. We could probably go back and increase rent here a little bit better. Even in 30-year mark, when this property is completely paid off, you'll see here that the property value of this home could be in that $300,000 rate just due to inflation. I'm not sure, how truthful. I can't reach out into the future and look at 30 years out, but our annualized total return, cash on cash, if this was just held in cash, would be about 7.92%. So kind of an interesting go through. So that is basically it. Basically, it was very expensive here in comparison to rents. It wouldn't make a whole lot of sense back in the past. I mean, this is actually a fairly inexpensive home. If you were able to go back in here and let's go ahead and edit this. Let's see here. Should be an edit report. Say we were able to buy this. We knew that it needed $15,000 of work and they want $135 for it. So instead of coming out there and they want 135, some sort of equity base in there. So we'll offer them $96,000. Maybe they really want to get out of this deal, and we offer them 96,000. They take and accept that. So we'll go ahead and we'll say that our purchase price is now 96,000. This drops down our closing cost 2% of 96,000. That is about 1,800 bucks there. Our repair cost stays the same. Repair value remains the same. Everything else remains the same. We can go ahead and punch back through here. We're going to go ahead and increase our expense growth. That remains the same. Annual income growth. We'll say 7% as our annual income growth. We're going to increase rent by 7% per year. Okay, this looks a little bit better now. Now our monthly expenses are a little bit less than $1,000. Our monthly cash flow is now showing $225.53. Our down payment is only $24,000. That was a much different, we're now getting a loan of about $72,000 here with our down payment of $24,000 because we bought this for $96,000. Here we have cash flow of $225.53. Our cash on cash return is still below the market return of 6.63%, but you'll be able to get some sort of you'll have a property, you'll be able to take deductions on that property. You'll have a tenant in that property paying your mortgage down every year. So every down you're collecting rent here. The very first year your annual income would be $14,400. You also have equity getting built up there. Here we have, this is showing $62,000 of equity. I wanted to kind of cover what you guys could be doing to kind of look at your own local market. Use the tools here, rentometer.com and BiggerPockets, to go out there, get estimates of properties within your city, punch them into the rental property calculator. They also have a BRRRR calculator. This is the buy, rehab, rent out, refinance, and repeat the whole process. So definitely take advantage of these calculators. So that is it, you guys. If you guys did enjoy the video, find it helpful, hit that subscribe button below, hit that thumbs up button below, and if you have any comments, questions, going over anything in today's video, drop it in the comment section. Did you like this video? Was it too long? Would you like me to cover something else? Let me know in the comment section below. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.